Tesla going from 10 to 1,000 makes it the best performing stock of the past decade. There were two technical breakouts that you could buy, one right here with this breakout from a base, and the second being this breakout from a base. You had a false one here, it had a nice base, a little bit of a breakout, okay, but you can see it didn't go anywhere and you would have gotten stopped out right here. But if you had remained vigilant, you could have been patient and gotten back in at this breakout signal right here. You had another false signal with this tiny little breakout right here, okay? And you got the last gap move, okay, before, this downtrend, which currently puts us at 700 bucks. So today, we're just going to focus on the two breakouts you could have gotten, which is this rectangle right here and this one right here. Okay, let's get into it. So for the first base in 2014, which led to the little breakout after a brief consolidation that showed this little down angle right before the breakout, let's take a look at the fundamental factors that led to the breakout. Now here's revenue per share annually. And let's focus in on this 77 cents right here, which occurred right in the little consolidation area before the breakout. Now going back in time, you can see that this 77 cents per share annual number was the highest number going back since the stock IPO'd. So that's our key. When you get this little consolidation area after a base combined with a new all-time high revenue, that's an indication that you might get one of these moves from 7 bucks to 30. Now, let's take a look at this base right in here with this little move and the breakout. So again, this tightness is what we're looking for after a base. You want to focus in on this key technical indicator. And what you're looking for is a downward sloping tightness right at the end. And we obviously get that from Bill O'Neill and Mark Minervini's books. So now we look at the last reported annual number, and it is this $25.16 per share, which is again an absolute all-time high going back. Now that didn't occur right in this tightness area, but it did occur right in the base, this being the base. So again, we have a clue. If you get a tightness area combined with the most recent annual revenue per share number being within the base, you've got an indication that you could be headed for one of these types of moves. Now this one happened to be with the stuff and you got this move back down to test, but if you had placed your stop right where you should have, which would be about there, which is right underneath this breakout area in here, right underneath the tightness area, you would not have gotten stopped out and could have gotten this move in. So now let's check out some other fundamental metrics. Let's go to the revenue quarterly. And again, you can see the same dynamic after we clear this up, that you had a 54 cents per share quarterly number, which was an all-time high since the IPO, right in this little tightness area before the big breakout. So that confirms our idea here that if you get a little tightness area combined with a new all-time high in quarterly and or annual revenue per share, you really need to pay attention. Because if you get a breakout signal, then you very likely could get one of these moves. Now this area right here is a little bit messy because you've got revenue at all-time highs and then coming way back down and then following up here, and it doesn't give you the exact signal beforehand. Now this breakout in this area isn't nice and clean and does not give you these all-time high signals right in the little tightness down angle part that we're really paying attention to for a breakout, as this revenue is not at all-time highs. It doesn't surpass this $8.38 per share back here. So this isn't formulaic, it's not an algorithm to type in and find you all the stocks that are going to be the decade's best performers, but it is general rules and guidelines that's supposed to keep you sharp and paying attention for the breakouts. So now let's go and see if there are any other fundamental clues. Here we have EPS annual, and this doesn't give us much because we've got this negative 74 cents is really at an all-time low right in this little consolidation area. that we're concerned about. So this goes to show you that if you're looking only at EPS numbers, as Bill O'Neill and Mark Minervini suggest, you could be missing out on the decade's best performers, as you would have in Tesla. In fact, if you would have waited until you got an all-time high EPS, and for that matter, the first positive EPS, you would have been waiting until most of the move had been over, and the stock was in fact topping out. So taking a look now at quarterly EPS, you can see it's the same story. You have a downtrending EPS into this tightness area, and you don't get any advanced warning that a breakout is imminent because this new high in quarterly EPS comes after the move is already over. So far revenue was our only clue that this stock was about to move. Again, free cash flow per share annually, it's the same story. This all-time high, which is actually 0 cents, didn't occur until after the move had already been completed. However, over here, with this all-time high at $1.09 free cash flow per share, which is the highest it had ever been, you do get that report right near the bottom of this COVID crash. So if you had missed this little breakout move right in here, and missed this rally, if you had been paying attention for this decline and then saw this free cash flow per share number reported, you may have been able to be quick and get in here somewhere near the bottom and taken this thing up for a move from about 80 bucks to 800. That's a 10x. So right in here, we've got our second key indicator that we might have a breakout stock. If you see a breakout and miss it, and then a pullback at the same time that a new all-time high free cash flow per share number is reported, you might be able to take a shot right in here, just so long as you set a stop beneath your buy point. So let's take a look at some more fundamental numbers. Free cash flow per share quarterly, and then cleaning this up here, you can see that this $1.08 number reported right at the bottom was again an all-time high quarterly free cash flow per share number, which could have tipped you off to buy this down move right here with a nice stop down below. Okay, moving on to some more fundamentals. Debt to equity ratio. And you can see in this first area of tightness that we're concerned about here, you had a debt to equity ratio that was going way, way up, tripling from within this base here. Now that generally is not something you'd like to see, so this can be another key indicator that maybe debt to equity isn't always what we need to be paying attention to in a bull market. This goes against my strong feeling that debt is a negative. But after analyzing this stock, you can see that if you screen out stocks for increasing debt to equity, you might be doing yourself a disservice. Here, we've got average diluted shares outstanding. Now normally, you want to see a stock that has decreasing share count. But check this out. All throughout this base here, this stock had been increasing its share count pretty substantially. In fact, it's increasing its share count all the way up. Now that too goes against Bill O'Neill's rules of low shares outstanding, because this is dilution to current shareholders, and yet the stock performed anyway. So after this analysis, we can see that some fundamental factors matter more than others, some don't matter at all, and a lot of the ones that get a lot of attention, like PE ratio, low debt, and a lot of the common ones we tend to think are important for a stock, seem to not matter at all, and if you're screening for those, you're going to miss stocks that are the best performers. And a lot of this is counterintuitive, so we need to pay attention to these and understand them better if you're going to be in these stocks that really make these moves. Now in a video that's coming up shortly, I'm going to go through the second best performer of the decade, and the third, and the fourth, and the fifth. And I think you'll be surprised because some of these stocks I bet you have never heard of. So if that's interesting to you, please subscribe and consider liking this video. And I'll see you next time. Thanks for watching.